the CSE Investment Podcast, and it's Thursday, May the 3rd. And we are missing a couple of people right now. We have Keith who's already checked in, Cezanne. Joni won't be able to be here. We have Dirk, and we have Marcus. We don't have John, but I'm sure they'll be coming in. It's kind of a rainy day down here in the Dallas-Fort Worth area. And so we've had a communications problem on our end over here. So I'm doing this by calling in. So you won't see my fantastic face today on my hat. And Dirk is here, and I want somebody to call it the email. I can't call in because I'm using the line today. But you can put it into the podcast, compoundstockearnings.com, and we'll get that email. And if anybody wants, if you notice anything different about Dirk, please send us a quick email. And if you also have a question that you would like to ask of Cezanne or Keith or Randy or whoever when they show up here, let me know. And again, just do it by email because I'm using the inbound line today to talk. Interesting. I've been talking about the fiduciary rule and how the fiduciary rule was being thought by every brokerage firm because they can't be fiduciaries because they don't know how. Well, I have another email of an article here that came to me just a couple of days ago.
Marcus?
And it says last minute bid to say fiduciary rule fails. And the fiduciary rule is dead and gone. It says the decision appears to put an end to the Labor Department's fiduciary rule as the department has not moved itself. The deadline is for doing so passed on April 30th. Especially for the government agency, referred questions to the fate of regulations to the Department of Justice. But it's dead and gone. So these guys, so this is particularly good news for Wells Fargo Bank. This will be able to have them expand their criminal activities as relates now to their brokerage business also. So yeah, that was exciting. So everybody would enjoy that. John's not on, is he? You guys see John?
No, he just called me, and I sent him another invite, so he's trying to get in.
Okay. When he gets in, I want to read an email we just got from him today. Because he does this dynamic trading. I mean, he'll, like last week, I think he had a loss of the week. This week, he's way exceeded it profit-wise. So I'll wait until he gets in. We did have a good email from Janie, who does micro moment trades. And I did one of Cezanne's this morning. Cezanne didn't complete the whole trade, but Jamie did. And she made 7% probably in 15 or 20 seconds. And we'll be getting more of those emails in later. Derek, why don't you give our audience a little report on how the stock is going and how the new New York Stock Exchange additions to our advanced charting is working out.
Okay, well, we rolled out a new version of advanced charting this week. So we're on a new infrastructure, which includes a new data set that brings back the NYSE data reporting for us, which is great because it expands the number of equities and ETFs that you can research. But also more importantly, we've built out on a more robust infrastructure. So the queries run faster, the charting draws faster, everything is quicker. And I'm really happy with it. We are still, since it's a brand new product, we are still kind of tweaking out some issues and making some more enhancements, but that will be an ongoing process. We're going to start porting over our other two charting products to the same infrastructure shortly.
Okay, great. I think the one you mentioned last week, in fact, you kind of made the announcement on this podcast that we're going to be adding to the toolbox. The toolbox will pick out selections that have the weekly expirations. And right now, our toolbox shows them when you put up an option chain, they show if it's a weekly option or not a weekly option. And but it doesn't select them. When you put in there to select for certain criteria, all the stocks out there in the universe, it doesn't select those. If they're there, they show up, but you don't know it. It doesn't select them based on that criteria. Because a lot of people are now just doing the weeklies. And so they have to go through a two-step process. First, they have to take what the toolbox pulls up, and then go check the tables for the options and see if there's a weekly on there. So
yeah, we're pretty early in the requirements gathering on that right now, but it is something that our clients are asking for. So we're definitely going to look into whether or not it's feasible to roll that out. So I should I'll just keep updating you guys week to week on how that's progressing, and eventually we'll get a delivery date.
Yeah, and if anybody is having a problem with any kind of problem, I don't care how small or large it is, with the new charts, just send us an email, and we immediately refer that to our computer guys that are the specialists in the charts department, and they'll fix it. But if we don't get anything from you, we're not going to know. And sometimes it's a peculiarity in your trading not your trading platform, but I guess it could be your trading platform. Well, the trading platform really wouldn't affect the charting, but your browser. I know there's several browsers out there. I don't know which ones. I'm sure one works better than the other. But anyhow, we can get them all. We don't know those things unless you let us know. So Cezanne, what happened in the momentum trading, the macro moment trading today?
Well, we Joni was not there today due to a last minute deal. So I was reviewing Qs and Apple, which was interesting because I don't normally look at Qs or pay them any attention. But we did talk through the indicators on both charts. And on Apple, we had a prep for a put trade, the one that you referenced, that we did have a client report trading. But it moved too fast for us to get in. But she did get in with good pricing, and so reported that, and we had a prep on it, and then we did not have another prep because there were some conflict in the indicators. So that's it. But it was a good.
Y'all had a pretty good week though.
Yeah, and Apple had earnings yesterday. So yeah, Apple.
I'm sorry, I talked to.
What? Apple had earnings Tuesday after the market closed. And so yesterday was, crazy wild with Apple. And then today it's still having quite a bit of up and down movement. I'm watching right now. So we could expect that. The market's so red that it's kind of causing everything to act sporadically. But anyway, it was a good webinar.
Okay. Is John in yet?
I don't see him.
Okay.
No. I don't know. For some reason, he's not able to get in.
Ask him to send the. Okay, I'm gonna go ahead and read his email here because it covers what Cezanne's micro moment trade plus Randy's momentum trade. I'll just read the whole thing. It's a good little email. It says, "Dear Cezanne, Joni, and Joseph, the following real money trades closed since last week. Momentum trade. He did an Apple momentum trade. He made 13.64% over 93.5 hours. That is a long trade, but that's a momentum trade, and that's what they're supposed to be. And then he did a macro moment trade again to Apple, and he made 17.46% over 19.5 minutes. Fantastic. So his week total is 31.10% for the week. The average trade for the two trades is 15.55%. Just fantastic trading, and I'd really like, he gets so emotional when he describes his trading. He did say down at the bottom of the email, says, now that Apple has reported much better results than most analysts expected, we can get back to reaping some very nice returns in the weeks ahead. Thanks for some very good training in the latest short webinars. I look forward to trying out the new advanced charting on the rollout." John J. from Chicago. Another interesting thing I was reading right before we started the podcast today, I was reading the latest report from Elton Musk. They come in and tell the brokers what it looks like they're going to be able to do in earnings. And I think Tesla. I think that Elton is going crazy. He first came along and said, here are the highlights that have everyone talking. As long as they are good questions. This sounds like me during a 2-day intensive covered call seminar. Musk begins the call. I think our letter says most of it, but I think we're going to spend extra time on questions and answers and try to answer as many questions as possible. I think we should be able to answer. So we're going to go as long as possible as there are good questions to answer. And then one question gets down here, and this guy asked this question, which sounded pretty reasonable. He asked this question. I won't read the question; it's too long. And Musk's response was boring, boneheaded question. I thought that was pretty cool. I haven't used that particular one, but I'll try to use that. And then Stanford Bernstein, who's an analyst, said, and so where specifically will you be in terms of capital requirements? And Musk, excuse me, next, boring, bonehead question again, or not cool, next. And this guy asked, and he said, this guy asked this question, Joseph Stack. It's a long question, so I'm not going to read it, but Musk's response was, we're going to go to YouTube. Sorry, these questions are so dry, they're killing me. Now, can you believe this? I mean, the guy's, going off the deep end. Oh, let's see, Marcus, he's also doing those cars that drive themselves, right?
Tesla? You're talking about, yeah, they may be. I mean, he's just having a hard time making regular cars at this point.
Yeah.
Hey, Joe, let's check in with Keith and see what his returns were for the week and what his activity's been.
Okay.
Yeah, had a great week. Had a open to CMIC last Thursday and closed it on Friday for a nice 4% gain. So, that was great. Didn't close for the 2% on Thursday. Came close to it, but given the volatility in the market these days, I just don't want to push it too much. So anyway, did very well there. I'm not going to open a CMIC today because the April jobs report comes out before the market opens tomorrow, and that can move things a bit. So I'll wait until tomorrow morning to look to open a CMIC there. Also been reviewing the charts a lot to try to find my momentum trades, and they're just not right there. So I'm being patient to try to pick another one there to pick a good one to come out there.
Hey, Keith, could you go back and touch on that jobs report again? There are certain releases and reports that come out that we consider as a trading group market movers. Where do you go to find that information for a new investor, and which ones do you think are the most important to monitor?
Yeah, there's a few places you can go, but I typically go to Bloomberg's website, bloomberg.com, and there's a link on their economy calendar, I think it is, or economic calendar, and it'll list them week by week. You can see what they are. Typically, the jobs report for me is on the trading I do is the most important that I try to steer clear of for the seeing the iron condors that I do, because you don't know whether it's going to move up or down. So I don't tend, and that usually comes out the first Friday of the month for the previous month. So like this Friday would be the first Friday in May. That'll come out for April. It's not always that way, but if the month ends on Thursday, sometimes it won't be Friday, it'll be the next Friday. But you can always find those on Bloomberg. The other ones that certainly can move the market are the Fed meeting, like they met yesterday, and on interest rates. They can move the market, and I try to stay away from those, although this month it was like 98% certainty they weren't going to touch anything there. It's funny, though, what else can move the market for the Feds is when they release their minutes from the meeting, which they typically do in about 2 weeks or so, or a week and a half, 2 weeks. That can really move the market because the people are trying to read between the lines on their discussions and all. I also not necessarily earnings, like Cezanne mentioned, Apple had earnings this week. I stay away from that, even on momentum trades. I've learned a couple years ago, I would trade things look like, I was anticipating it was going to go up after the earnings. The charts looked great. It was going to go up, so I bought a call for a momentum trade. Earnings came out. The stock skyrocketed. It's like, oh, right, I'm going to make a ton on it. Wrong, because the prices are inflated before the earnings come out due to the uncertainty or the volatility of that. As soon as the earnings comes out, that volatility goes away and the prices come down. So even though the tick went exactly the way I wanted it to, I didn't make money, or maybe I even lost a little bit on it. So stay away from earnings on that. I also tend to not trade on my iron condors on quarter boundaries. So going from the first quarter to the second quarter, I won't trade that time period. Let things settle. They can really be pretty crazy as portfolios are being rebalanced. And 2 other times, I stay away from July 4th week. Don't trade the iron condors that week. And I also don't trade the week between Christmas and New Year's. So quick synopsis of what I do and what I don't trade on.
That's exactly what I was looking for. So it's important to note that at CSE, we use a series of rules. We have a rules-based trading system, and that's how we look for positions. That's how we enter our positions, and that's how we exit our positions. But there are some times when we completely suspend trading because the rules don't always hold up in those environments that Keith and Cezanne and Joni talk about in their seminars. Earnings, anytime where the volatility could be irrational, then the rules don't always hold up, and it's best just to sit that out and wait for a calmer period, and then reapply the rules, re-enter, and continue trading.
Absolutely.
All right, Joe, back to you.
I think, okay, thanks. I think the micro moment trade, so is a good example of that, Dirk. We'll get Cezanne's response. That's the closest thing we've got to day trading. And a lot of people love day trade. These aren't day trading by nature. These are very systematic, follow the rules. Again, just like Keith follows the rules and Randy follows the rules. Cezanne and Joni have rules they have to follow for these very fast trades. And that's why their returns are so good versus day traders who tend to have a few good trades and they keep going and they lose all their money. And so, again, very rule-based. Cezanne, do you feel that same way about your micro moment trades?
Yes. I mean, that's what we teach is how the indicators are setting up. And that's what we do on our webinars is we're using those indicators and we're telling sort of, rules, for lack of a better word, of if M1's, heading straight up, you're not going to prep for downward momentum. Or if M1's heading straight down, you're not prepping for upward momentum. So there's all sorts of, I guess, rules, or I don't know exactly what we would call them for ours, but the subtleties that the charts tell us that either give us an indication that it's a good time to enter a trade or stay out of a trade or exit a trade.
Yeah, day traders are just speculators, and they just trade on hunches. They feel like something's going to go up and or it's going to go down, and they trade on that. And if you've ever been to a day trader's not a blog but a chat room or whatever it is, I mean, this is the wildest stuff you've ever heard in your life. They've all got these theories and these stories. And if you ever want to see a difference between our rule trading versus hunch trading, then go to one of those sites sometimes and check it out. So, well, I don't know what happened to Randy today. I'm sure he must be busy, quite possibly helping everybody out there. And John still didn't get on. Is that right?
Yeah. He called for some reason. He's had trouble getting in. So he did try, just wasn't able to get in.
Hey, Joe, I wanted to mention one other thing too about not just the rules, but understanding and studying the stocks or indexes that you're trying to trade. Like one of the things that you hear often for Cezanne and Joni, they say, well, this just doesn't look right for these examples for Apple or the Qs, because you can look at the spread between the bid and the ask prices and it's just out of line. Something's not right. And once you be able to study those things and understand what's reasonable and what isn't, also will help you or prevent you from getting into a bad trade, just not trade when things just don't look right. So very much a study of what's right and what isn't helps you out also.
Absolutely, and that's the difference. So that's what gives the seminars value. When people pay for these seminars, they're getting value for that seminar because they learn. It's easy maybe to memorize the rules, than to learn these subtleties like you just spoke of, which is what you get from people that attend your seminars and Randy's and Cezanne's and Joni's and all. So That's really good point to make. Okay, well, it's really getting lightning over here now, lightning and thunder.
Yeah, the storm just picked up here too, Joe. My lights just flickered, as a matter of fact. I would like to remind everybody to go check out the website. If you're new to CSE or this is your first time watching the podcast, it's very unfortunate you did not get to see Joseph Hooper in one of his famous hats giving his dialogue. So please check back next week so you can see that. But I would like to send you to the website, www.compoundstockearnings.com. Make sure you sign up for the Cow Report. That's our free weekly report, which includes an editorial by Joseph Hooper. And it's been in, circulation for about 16 years? Is that right, Joe?
Almost 20.
Almost 20.
Wow. The first of the year, and in that Cow Report, there's all kinds of emails, hundreds of emails from clients that are asking questions, and the answers are there from our folks on here. And so you really learn a lot, and you learn what's going on in the CSE world. And then, of course, at that website, like Dirk just said, you can find out about seminars that we do, what they cost. Some of them have free time periods. You can sign up for things and sign up for seminars and do everything and find out just what's going on, schedules of when we have seminars and such. And so it's compound, like Dirk said, compoundstockearnings.com, and it's all there. It's all there. Now it'll be. I know it, Dirk. You just can't believe it. Fast time has passed. Did you get any emails from anybody explaining what's different about you today?
Hey, Joe, I'm sorry. I'm having a hard time hearing you now. The rain's coming down so hard that it's hitting the window here.
He asked if you got any emails that people.
Oh, no, we don't, Joe. I'm looking at the queue right now. We don't have any new emails in the queue.
I noticed.
Well, yeah.
What?
Joe, you're cutting out. For some reason, I think your line is cutting out now. I think maybe the storm is having an effect.
I think we might want to move to close.
Okay.
Yeah, I think we should probably close out.
Yeah, we close out. We've been here about over 20 minutes, so let's close it out. Appreciate everybody being here today. Go to our website, compoundstockearnings.com. Sign up for the free Cow Report, and check out that site. It's got all kinds of information, and we will see everybody here next Thursday. I will be doing the podcast in Puerto Rico next Thursday, and so I'll be doing it in Spanish. So if any of you out there speak Spanish, be sure to attend. Thanks, everybody. Thanks, Dirk and Marcus and Keith and Faison and just everybody. So thanks a whole lot. We'll see everybody later.
Okay,
bye.
Thanks for joining us, guys.
Have a good week, everybody.